Hi, it's Frank from CappThesis. Let's talk about topping patterns. As we know right now, coming into today after the Fed meeting, S&P just had this double top triggered as the index was slicing below that 4430 area in the final hour of trading as things really started to unwind. And so far, since the March lows, we only had one successful bearish pattern play out, and that was in early August here. You can't even see it because it was so short term, but as we know, that led to a bigger drawdown. So as is clear below, if this were to hit that downside target near 43.20, about 2% away from here, it would coincide with the lows that lined up in June and August. And so if we connect all of those points here, then a much bigger topping formation can easily be identified here. Now, it isn't as symmetrical as one that developed toward the end of August, but sometimes the best looking formations, the one everyone sees, are not the one really that ends up working out, right? And so this one now is on a lot of people's radar screens, especially the perma bears, right? And so that 43.20 area to 43.30 is very important from a long-term perspective as well, because it also represents the August 2022 high, right? So that means it has a lot of psychological significance because you keep on going back to that August point because that was a key high. And of course, we know what unfolded over the next 2 to 3 months there. And so, how likely is it, that a big bearish pattern like this actually gets triggered and hits that downside target? Now, downside target, going back to the other chart here, would be down near 4,050, which would be about 12% from the July high, so pretty substantial. So we go back to the last time we showed this bearish pattern again in August, and we compared it to how things played out in March, where we had a big bearish pattern potentially fail, right? And we've seen this occur before, where the biggest bearish setups actually end up not working out. Sometimes you get a temporary break and then clearly a big rally. We've actually seen that not only in 2023, but in 2022 as well. Now, the difference is that the bearish patterns that did work out 2022 happened after strong, sharp bear market rallies, right? So after a big rally like that. Now, the difference, of course, with the run up from the March lows was that it definitely was strong, as we know, up over 20% in 4 months. So a good clip, but that's not nearly as fast as it happened back in August of last year, where we had a 20% gain in just 2 months, right? So half the time. Regardless, we should remember how that unfolded. And this is what it looked like last year, of course, from the rally from all the way from before this in June to August. This is an hourly chart. Things started to break down and pretty quickly had a small downside target hit, but that really told us that momentum had changed, right? So that was quickly acquired. And when this late bounce in the end of August faded, you know what happened after that. And then if we go down even further, it's led to more of the same, right? This is that same pattern here, hit a downside target, came back down, held around here, 3,900 or so, another rally ensued. And so right here, we basically had 3 different bearish patterns all packed into one area, right? And that's how things really took place a lot of times in 2022, where, momentum shifted, bearish patterns developed, and then more of the same where downside targets hit. And we see even the biggest pattern here was all the way down and hit the downside target at the very end there. And so we have to consider too, now this is occurring within the confines of a typically bad time of the year. We talked about that in the last video, from September 20th to September 30th. And looking at this from a 20-year view, the average path, when does downside action typically occur in September? At the end, right? So the concern, of course, is that this gets much worse than that. So right now, let's consider for what it is. Right, we had the Fed come in yesterday, obviously had a hawkish tone going forward that hit things, and now we have bearish patterns in existence. Now, seeing these play out over the next week wouldn't be surprising considering seasonality. What will be, of course, a shock to the system if it got much worse than that. We end up going much below the August low into the start of the fourth quarter. That's it for today. Talk to you soon. Thank you.